You're waiting in line for a coffee, constantly swiping down on your screen, refreshing the price of the USD. The Forex market never sleeps, and because it now lives directly in your pocket, the psychological temptation to peek at your positions is relentless. That constant access introduces severe mechanical dangers. When you're standing in a public space, typing 1.0 lots instead of 0.1 is a catastrophic split-second fat-fingered error. And if you try to execute that trade over a crowded public Wi-Fi network, the connection jitter practically guarantees severe slippage. But the most dangerous side effect is the boredom trade. You open the app not because your strategy dictates an entry, but simply because you want a quick dopamine hit of excitement while you wait for your order. When you treat your trading platform like a casino game to kill time, you mathematically guarantee the slow, steady erosion of your trading capital. Professional trading requires immense macro perspective. On a 32-inch desktop monitor, you can comfortably evaluate a multi-year setup. On a 6-inch piece of glass, that physical space and perspective completely disappear. This chart shows exactly what gets lost. Up close on a tiny mobile screen, this recent price action looks like a massive tradable spike. But when we pull back, we see that it's actually just microscopic noise inside a massive, undeniable downward trend. You cannot spot multi-time frame correlations through a keyhole. That is why professionals operate under a strict division of labor. They never use their phones to analyze the market. They use them strictly to strike. To trade efficiently, you must separate your workflow into two distinct environments. The first is your desktop, which functions as your war room. This environment is where the heavy lifting happens. Your desktop is strictly reserved for identifying complex liquidity grabs, establishing your daily directional bias, and mapping out critical supply zones. Notice how this interface is organized. By doing our technical charting on a cloud-synced platform, we can color-code our analysis right at the desk. We mark observation zones in blue and our immediate execution zones in bright red. These predefined zones form a rigid, objective battle plan. Once those levels are set, there is absolutely zero analytical decision-making left to do. Your execution logic is entirely locked in before you ever step away from your chair. Once you leave the desk, your smartphone assumes its proper role. It is a field radio. It stays completely silent until an alert tells you the market has reached your target. This visual demonstrates the clean chart rule. If your desktop uses complex Ichimoku crowds and multiple EMAs, you have to strip all of that away on mobile. To maintain visual clarity on a small screen, you prioritize bare candlesticks and a single smooth moving average. Because we synced our desktop layout, the bright red horizontal ray we mapped out earlier automatically populates exactly where we need it. It acts as our definitive trigger line. In this synchronized hybrid workflow, the smartphone sheds its analytical role and functions as a dedicated execution terminal. But an execution terminal is useless if it's slow. In high-stakes trading environments, latency is your primary enemy. These headquarters house the Bank for International Settlements. Their data shows extreme foreign exchange market volatility can spike in milliseconds during major news events. You cannot afford dropped packets when the market is moving. Relying on a stable, dedicated 5G cellular connection is a strict requirement over the unpredictable, stuttering latency of public cafe networks. Your connection must also be hardened. Your phone is a direct gateway to your capital. Professionals require biometric authentication for every app launch, and they rely on hardware-based two-factor authenticators instead of easily intercepted SMS codes. If you run automated trading scripts, you execute them through a mobile-optimized virtual private server that ensures your trades remain permanently bridged to the broker, even if your phone battery dies completely. Upgrading your connectivity and locking down your security protocols elevates a standard consumer device into an institutional-grade tool. Even with perfect speed, manual data entry on a touchscreen remains highly dangerous. To bypass the risk of typos, professionals use visual execution tools to lock in their default lot sizes. If you are managing a smaller balance, you hard-code those defaults to microlots, creating a strict ceiling on your exposure. You should only ever enable one-tap trading to bypass confirmation screens if you have mathematically pre-programmed your stop-loss and take-profit pip offsets to trigger instantly upon entry. Finally, you stop staring at the screen entirely. You establish a strict hierarchy of alerts, a price alert before your entry zone, an indicator alert for overbought levels, and a cloud-synced alert for a trendline break. Automating risk parameters and relying on external alerts helps bridge the psychological gap, reducing the impulse to overtrade or panic during execution. To truly master this workflow, you need a mobile trading manifesto, a set of hard behavioral boundaries. You commit to zero trading during social events, and you never open the app after 10 p.m. unless an active trade is running. The rule is simple. If you wouldn't take the exact same trade while sitting attentively at your professional desk setup, you do not take it on your phone. The hybrid workflow prioritizes quality over frequency, enabling you to strike with precision only when the market hits your predefined levels. Stop gambling with your capital and start executing your strategy. Download the FXNX Mobile Pro app today, sync your desktop watch lists, and experience institutional-grade execution with 0.0 pip spreads.